The payments industry is experiencing a major shift as card-based payments compete with the rise of account-based and instant payment methods. Consumers are increasingly opting for faster, more convenient payment systems such as SEPA, instant credit transfer in Europe, faster payments in the UK, UPI in India, BLIK in Poland, PIX in Brazil, and emerging platforms like FedNow in the US and PayNow in Singapore. As regulations like PSD3 and frameworks such as the Digital Euro and MiCA develop, the focus on faster, real-time payments continues to gain momentum. This shift towards instant payments is significantly impacting business operations, presenting both opportunities and challenges. On the positive side, real-time payment schemes such as instant, SEPA, credit transfer, PIX, BLIK, UPI offer businesses faster cash flow and reduced payment processing times. However, the downside is the increased fraud risk due to the speed at which transactions are completed. Unlike traditional payment methods where businesses have time to flag suspicious transactions, instant payments leave no room for delay. Fraudsters can exploit this, particularly through social engineering schemes such as phishing, to trick customers into authorizing instant transfer to fraudulent accounts. So for business, the impact can be very devastating. Fraud-related financial losses are only part of the problem. Businesses must also contend with reputational damage, particularly if they are perceived as failing to protect customers from fraud. Additionally, false positives is when legitimate transactions are flagged as or declined as fraudulent. This can also hurt customer trust and lead to lost sales. In the case of card payments, businesses are increasingly dealing with chargebacks, which arise either from actual fraud or friendly fraud. With fraudulent chargebacks, the transaction is typically disputed after the fact, leaving businesses liable for the cost as well as additional chargeback fees. Friendly fraud, on the other hand, is when customers dispute legitimate transactions, often after receiving the goods or service. Chargebacks are particularly problematic for businesses with high chargeback rates, as payment processors may impose penalties or even suspend accounts if rates exceed certain thresholds. To successfully navigate this shift towards instant payments and the accompanying rise in fraud risk, businesses must adopt a comprehensive, proactive fraud prevention strategy. The key is to implement a global, agnostic platform that can monitor transactions across all payment methods, from traditional card payments to instant schemes like PIX, SEPA, instant credit transfer, BLIK, and UPI, while also addressing the risks posed by chargebacks, whether they arise from actual fraud or friendly fraud. Furthermore, businesses should prepare for future regulatory frameworks like PSD3 in Europe, which will place greater emphasis on security and fraud prevention across the entire payment ecosystem. As instant payments and digital currencies like the Digital Euro become more widespread, businesses will need to adapt their fraud prevention strategy accordingly. Finally, businesses must take a holistic, multi-channel and multi-layer approach to fraud prevention that not only considers the payment details but also the customer's entire digital footprint. This includes tracking physical data, digital identities, device information, and behavioral patterns. By implementing a comprehensive fraud prevention strategy, businesses can protect themselves from the growing risks associated with instant payments, chargebacks, and fraud, while continuing to provide secure and seamless payment experiences for their customers.